Alright learners, so having gone through the spreadsheets in which we've learned that there's an accounting equation and that there are always two entries in order to get the equation to be in balance. We're now going to move into the ledger. Now the general ledger is the official record keeping of any business, and it's based on the principles that I've been going through while we've been doing the spreadsheets. So first of all, if we could just go back, remember we said that the assets minus the liabilities equals the net worth. And that's how we started with our spreadsheets. We started off looking at task 3, where we had our assets minus our liabilities equals the net worth. We then changed that round and said, right, well, let's get away from the minus sign. And we said assets equal liabilities plus the net worth. And we saw that the liabilities and the net worth added up to the same as what the assets were. Then we took our net worth, the owner's equity, and we broke it up. And we saw that this net worth was made up of the capital when the owner put money in, drawings, which decreased his net worth when he took money out of the business, income is the money he's earning by being in business, and the expenses he has to incur in order to earn that income. And all of that will affect the net worth. So we wrote it out as this, where the assets equal the liabilities plus the capital minus the drawings plus the income minus expenses. And then we said, no, but hang on, we've now got minus signs again. So let's get rid of it. So we moved those over. And we had assets plus drawings plus expenses. And we've just moved those over. And you know that from maths equals your liabilities plus your capital plus your income. Or, as I then said, I took this and I gave an acronym of DAXL. Right, now if we have a look at a ledger is broken into two identical parts. There's a dividing line between the middle. And in accountancy, we don't talk about the left and the right. We call it the debit and the credit. So our principles now, if we go, we've got the DAXL. But what we're going to say is that the DAX accounts will go on the debit side and the SIL accounts will go on the credit side. But we did see that some of the accounts increased and sometimes they decreased. And so we take it one step further and we say all the DAX accounts will increase on the debit side and all the SIL accounts will increase on the credit side. Now I know that sounds very, very confusing and, you know, like rocket science. But you'll see that as we go through it, it all falls logically into place. Remember, this is nothing we've made up. This was based back on our accounting equation that we had right at the beginning of the assets equal the owner's equity plus the liabilities. But we just rearranged some of it. So, before we get on then, we're going to, in the ledger, we're going to look at the principle that there'll always be a double entry. And we saw that already in the spreadsheets. One will always be on the debit and one will always be on the credit, and that's what I'm going to focus on, and I'll show it to you and I'll prove it to you. And then obviously, because one is on debit and one is on credit, the debits and credits must always equal. So let's now go and look at a ledger account, and for this I'm doing task 3 again. If you look in your training manual, you've got the task 3, but let's look up and let's find your ledger accounts and let's go through this exercise. Now learners, I don't want to be flipping around too many pages, but as we're working through this, you can look at your spreadsheets and confirm what we're doing. So let's go back to the first one. Carol went to the bank to open up a business check account in the name of the business. And remember we said business entity rules, we're keeping the record of the business now. And they transferred an amount of 50,000 from her personal savings into the business's bank account. So we said, if we look back on the spreadsheet, it's going to affect the business's bank account because they're receiving money. But we need to keep a record that Carol has put capital into the business. And so we had two columns before where we used bank and the worth or capital column. We are now going to use ledger accounts. So we're going to have a bank account and we're going to have a capital account. But if we go back to these principles, bank is an asset, so it will increase on the debit side. Capital, on the other hand, will increase on the credit side. So I've put next to bank here a plus on the debit, and therefore the minus will be on the opposite side. Capital will increase on the credit and decrease on the debit. And especially at the beginning, put these plus and minus signs on. It'll make it much easier for you. So now let's look at the bank account. This is the business's bank account. They're receiving 50,000. So that bank account is going up. So because it's going up, we're going to be on the debit side, we're going to put in 50,000 Rand. Remember, here's the dividing line, please. In your thing, so it's this is your Rand column. And if you look at official books, you'll even see a cents column, but in view of space now, I've reduced it. So there's 50,000 going in. So I have now recorded that the bank is going up. But I also need to record the fact that that went into capital. And you have to say to yourself, well, what's happening to the amount of capital, the amount that Carol's invested? That has also increased. She's got more money invested. She had nothing before, now she's got 50,000. So capital's increasing, so I'm going to put it in on the credit side. So there's the debit, and there's the credit, and the two sides are equal. Now, these other columns, what are these things all for? The first two columns is the date. We need to know when this happened. So this happened on the 1st of March 2018. The details over here is, where's the contra account? Where's the other account? Yes, your bank's gone up, but what is it for? Where else are you putting it? And you're putting it here in the capital. So I'm going to write capital here. At this stage, I'm going to ignore this column. It'll come in later. It's called our folio column, but we only use it when we get to journals. So now I've recorded that my bank has increased on the 1st of March because capital was put in. And so in my capital account, I'm going to say over the middle line, also March the 1st, 2018. But the double entry, where did this money go to? It went into the bank. And so you've got a double entry, a debit and a credit. But very importantly, you've also got the name of the opposite account. And I've done a double entry, one on the debit and one on the credit. So let's go on to number 2 now. Carol bought the following equipment on account. Now, so we've got hairdressing equipment. Now, hairdressing equipment is an asset. So the plus will be on the debit side, the left-hand side. Right? She's also buying office equipment, which is also an asset. So it'll also be a plus minus. But her accounts payable, remember, she's buying this on account. So she's got a liability. And if you go back to your rule that I said to you, liabilities increase on the credit side. So on the credit side over here, in the accounts payable, I've got a plus. So let's do each one separately. So we're looking at hairdressing equipment. We say, all right, what's happening to my hairdressing equipment? It's increasing. So it's increasing, so I must put it on the left-hand side, the debit side. I've now got 11,000 rands worth of hairdressing equipment. But this I haven't paid for yet. I've got a debt. I owe people money for this. So I need to keep a record of that. And so if I go to my accounts payable, I'm going to say, right, what is happening to my accounts payable? Well, I'm increasing it. I owe them. And because I want to show it as a liability, it's got to go on the credit side. So again, there's your double entry. Debit, your equipment is increasing. Credit, your accounts payable, your liability is increasing. And your date here, please, March the 2nd. And this, where's the other account? Accounts payable. Now, as far as possible, we try not to abbreviate, but sometimes we can't fit all the words in, so we have to do acceptable abbreviations. You can't just use one letters. And in the accounts payable, I'm going to write here March the 2nd, 2018. And this was my hairdressing equipment. Right, again a double entry. Now you try the office equipment. And so again, office equipment increased and her accounts payable has increased. So now I can see that I owe 19,000 here but I also know exactly what I owe for. Right, number 3, she placed an advertisement in the local newspaper and she paid $300. Now, paid means it's coming out of the bank. Now, when you're paying, when you're reducing your asset, it's going to go on the credit side. And she's paying out 300 Rand. The date is March the 3rd, 2018. And this has been paid for an advertisement. So you've got the details so people know what it is. By putting it on the credit side, people that can read accounting know that that is decreasing your bank. But now we need to keep a record of what that's for, and we need an account for advertisement. Don't be scared to open accounts. You can open as many as you want. Now, advertisement is an expense to me. All right? And remember when we did the spreadsheet, we moved the expenses across. And so we had DAXL, X for expenses, and expenses increase on the debit side. So we've got more expenses now. My expenses is actually increasing the amount of my advertisement. The money came out of the bank for 300 Rand. Now I want you to do number 4. Same thing, again, you're going to buy supplies. So you've got a supplies account. But this time you actually are putting it on. No, you bought the supplies and you paid by check. So I want you to do the supplies for me, please. So again, your bank is going down. So you're crediting the bank. And you're now having a separate supplies account. So unlike the spreadsheet where we only had one column for expenses, we're now keeping separate records. Then on the 5th, she returned some of the salon equipment. Now remember, we've got salon, which is your hairdressing equipment. So she's returning some of this. And because this was originally bought on account, she's reducing the amount she owes. So see if you can do that entry for me. So she's returning equipment. Her asset is going down, so on the minus side. And at the same time though, because she's returning this, she's reducing the amount she owes. You don't have to pay for stuff that you've returned, so she's reducing it, and so you're reducing it with hair equipment that has been returned. Now number 6, she's receiving her first 4 clients. She gets 280 Rand, and so you will notice in your sheet that you're going to have a thing called fee income account. And then she paid wages and she took money for her own personal use. So I want you to try those last 3 entries on your own. And so how did you do? Your fee income is going to increase your bank, so it's on the debit side. But your wages, and when the owner takes for his own personal use, remember business entity rule, we call that drawings, your bank is going to go down. And double entries, your fee income has increased. Now this is an income account from your DAXL. Remember, going back to the DAXL, the I for the income increases on the credit side. So you receive 280. Your wages and your drawings on the debit side. Now the fact that this 280 is on the credit side, I know that that's an income, whereas I know that that is an expense because on the debit side. So the debit and credit is very, very important. Just some other things just to make your life a little bit easier. You don't have to repeat March once it's in the account until such time as it changes. And you don't have to rewrite the date. They're both on the 7th. You don't have to rewrite it. It's not, you can do it, but it's not essential. Right, now our exercise stopped at that point. Now, we want to know how much money is in this bank account. So we need to balance. If you go to an ATM, you want to know what your balance is. You want to know how much money is in the account. So you know now that you received that amount. It's on the debit side. I know I received that. But I know that I paid out that. So your balance is what's the difference. So let's just add up the receipts and add up the payments and find out what's left over. And so the debit, I received 50,280. I spent out 2,300, and that means I've got a balance. This is my balance. This is how much I've got left over, 47,980. And if you look back to the spreadsheet, you'll see that's exactly the same total that you had there. But now we need to indicate that on our ledger. Now basically what we want to do is we want to show this account is in balance. And at this stage, this side, the credit side, has got less money in than the debit. This side was short by 47,980. That's the difference. That was the total there minus that. So if I put that balance figure on the smallest side being the smallest number, and I add up this, I will get a total of 50,280, which is exactly the same as what this side is. So what I'm saying is, if the debit side added up to that, the credit side was short by 47,980. 50,280 minus all of these payments. Now, if that is the correct figure, if I've calculated it correctly, it will mean that that will add up to the same. What am I doing over here? I've just said, if my debits is 50,280, that is equal to the 2,300. I'm taking that over plus the 47,980, and those two must add up to the same. Now, it's a way of checking ourselves. So once we found the balance, we put it on the smaller side, and we should add up again. Now, this we call our balance carry down. We are carrying it. We're lending it to the smaller side just to check that this does add up. As long as it agrees, then we know we've got the correct figure. And everything in accountancy, a debit and a credit. That is finished now. We found the balance, so we go under the totals and we go to the opposite side. And we go on now into the opposite side, and we're going to go to April the 1st. Now I know it looks a bit silly because I only put up to the 7th here, but just imagine that she closed for the rest of the month. The next month is April, and that is her balance brought down of 47,980. So she's going to start the next month with 47,980, which is exactly what we did when we started spreadsheet 4. There it is there. Maybe a little bit easier to understand the spreadsheet because we just plus and minus. So the principle, find the balance, find the difference. Put the difference on the smallest side, and I mean smallest by the amount of value, not the number of entries. So that if I double check, these two are level. So they are now in balance. And then bring the balance down to the next month. If we look at our other accounts over here, please, the capital account only had one entry, so I don't need to do anything to that. But we need to balance out the hairdressing equipment. We need to know how much hairdressing equipment we've got. So we had 11,000, we returned 600. So can you balance that for me? And then likewise, I want to know how much I owe for accounts payable. I owed this, I returned that. Can you work out what you still owe? Alright, so let's just go over that. Your hairdressing equipment, you had 11,000, you returned 600, you've got a balance onto the smaller side, so the two sides add up to 11,000. That's the correct figure because they do agree, brought down, and it's back onto the asset side because I've got equipment. My accounts payable, I owed 19,000. I returned 600, so my balance I still owe 18,400. Those two add up to the same as that total, and so my liability onto the credit side, I've got a debt of 18,400. At this stage, all you need to do is balance the accounts that have got more than one entry in. Alright learners, now in your book, you now need to carry on in the exact same ledger accounts. In other words, underneath these balances, you're going to carry on and you're going to do task 4, which we already put on the spreadsheet, and you're going to put that into this ledger and you're going to rebalance out. And I'm leaving you to do that one on your own. The memo is on the web, and so you can refer back to that.